Well, so glad you're back with us for another GoldSeek Nugget. Today's featured guest, David Morgan, the silver investor. It's a real pleasure to welcome back David Morgan to the show. Hello, David.
Hi, Chris. Great to be with you.
Let's begin with silver. You know, it has lagged behind AG, behind gold. But instead of looking at this as a negative, if you will, it seems to me like an incredible opportunity.
Well, I think that's a good way to look at it. You know, I just read an article one of my subscribers sent me, and it was about the gold-silver ratio, and the essence of it was that it's meaningless, and even though this author said it was meaningless, his conjecture was that the spread would continue to widen. In other words, the gold-silver ratio would go opposite of what I have forecast, which is that it would narrow, meaning that silver would outperform gold over the long haul. He was suggesting just the opposite. And, of course, the facts are what they are. Everyone's entitled to their own opinion, but a fact is a fact. And the fact is that the gold market bottomed in 2000 and the silver market bottomed in 2003. And at the time that the silver market bottomed, the ratio was 80 to 1, and today it's, in the 60s. So from that point till this point, silver has actually outperformed gold on a relative basis. Now, I fully admit that if you drew the starting line as some other relationship, it would be different, and that's true. So, I'm cherry picking the bottom, but the bottom of the silver market was September of 2003, just like I'd forecast for so long. I think that silver is going to do what it did last time. A lot of my subscribers, a lot of people have gotten kind of upset that silver hasn't done what they wanted it to, but the markets do what they do. Certainly we don't, as individuals, really have that much control over the markets, and there is manipulation in almost every financial sector that exists. I mean, it's pretty well documented, even in the public domain and even in the political regime, if you care to do any kind of cursory analysis. Point being that I think silver is undervalued relative to gold still. And coming back on point, what happened in the silver market in the late 79, 1980 was, if you look at it and study it closely, and of course I have, what you'll see is that silver didn't really do a lot relative to gold. It was kind of tagging along with gold, you could say, until the last bit of panic buying, that euphoric part of the market, which I fully expect is ahead of us. And during that time frame, silver really overshot gold. And I believe the similar thing will happen this time, and I believe it for a couple of reasons. One, when silver did hit $50 plus intraday in around the 20th of January 1980, the amount of silver that was available for investment was about 1.6 billion ounces more than we have today. And when that took place, Chris, the real impetus for that was the destruction of the U.S. dollar. Believe it or not, that's what was the belief at the time, and I held that belief, by the way. And it was mostly U.S. citizens that were buying into the market, and it took it up. Now, of course, the Hunt brothers were involved, but they'd actually ceased their buying long before it got to that price, by the way. And so you see what took place was a $50 price intraday with a lot more physical silver available, basis a small 5% of the world's population that was the total amount of potential buyers, and of that, 250 million at the time, probably less than 1% of the U.S. population was actually involved in buying in the physical metals. So now you've got maybe 500 million ounces, 600 million ounces in bullion form, which is the form that sets the price. It's a worldwide market. You can buy silver now in, China, Russia, all the Asian countries. The Australians are more involved. So you have a huge demand relative investment-wise that you had more than 1980. You've got a far smaller amount of silver. And you've got the Internet. You've got the biggest communications device that's ever been invented. I mean, I look at the Internet similar to the Gutenberg press invention, meaning that, this is a world changer. I mean, just like the Gutenberg, printing press was a world changer that, knowledge wasn't for the elites only. It could be spread to the masses because of the printing press. Same thing with the Internet. I mean, real truth is out there for anybody that can get online and seek it out. So if silver can do that in 1980, What can it do in 2012, 13, 14? I don't know when it's going to peak. I think it's going to be probably 2012 or later, but the idea, I think, is very clear. So does it take some conviction? Yes. Does it take some patience? Yes. Does it take an investment mentality? Yes. How many people have those qualities? I'm not sure, Chris. It seems today everyone's got ADD. You go to a new website, and if you can't find what you want within the first 25 seconds, you're off seeking another website. It's just insane what's going on out there. And I attribute it mostly to the culture. Everything is speeded up, and with the Internet, which I'm so happy about, it's got a downside. The downside is this super instant gratification, you know? I mean, it's the fast food restaurants, it's the instant download, it's the I subscribed to you, 2 seconds ago, where's my PDF file, and on it goes. And this is the mentality that I see. I mean, I try to be objective on these type of things, and that's how I see it. I do call them like I see them, as you know.
One of the, I think, interesting cure-alls for that attention deficit syndrome or disorder that we're seeing with this information age, which, as you say, on the one hand is an incredible breakthrough, and on the other, there's always that trade-off. This is where I think silver and gold are particularly useful, David, in that you can take physical possession. And then if you suddenly feel the urge to sell all your silver by the click of a mouse, well, it's put away somewhere safe to dissuade you from making that careless decision.
Well, I've always advocated, as you know, to buy the physical metal first, and I'm not a bullion dealer. I mean, once in a while, it hasn't happened much in the last few years, but when I first started the website, with the name Silver Investor, it's, pretty easy to assume that I'm a bullion dealer, and of course I am not, and I recommend some from time to time, but I've always advocated everyone start a precious metals portfolio with the precious metals themselves, because that is the basis of a sound investment decision, and it's the best asset class to start. In other words, when you're saving your fiat money in real money that's been money for 5,000 years, it's pretty hard to go wrong over the long term. Certainly the paper price goes up and down, but I try to get people to do a paradigm shift, and I have to admit it's even hard for me. But if silver and gold are money, and you owned X ounces in the end of 2009, and in the middle of 2010 you own X plus 50 ounces, you are, by definition, wealthier, regardless of what the paper price has done in between. Now, that's a hard concept, and it does require a paradigm shift in your thinking. But it isn't that the price of silver has gone. It's the price has gone down, which is just a relative thing, but the amount of silver or gold or both that you own has gone up, so you own more of it, so you have more wealth. And the amount, an ounce of silver or gold is the same anywhere in the universe. In other words, it's not what changes. It's the relative price. And then you've got to look at the currencies. Well, is it worth more in Canadian dollars? Is it worth more in Aussie dollars? Well, the fact of the matter is those vary day to day. But the overall trend, and it's been this way for a while, is that gold and silver are going up in all currencies. Eventually, what will happen is the currency of choice will probably be shunned. And that's the U.S. dollar, and that's what Jim Sinclair keeps talking about, and I try to reiterate it, that it's a currency event. It's not a demand-pull inflation. It's not a cost reduction. It's the end game, and the end game, unfortunately, in these great inflations has always ended the same way, and that is that you have a reneging of the acceptance of the debt instrument to pay off a debt. I mean, to accept a debt to pay off a debt is rather ridiculous when you think about it. And all dollars come in as a result of creating more debt. And that's what the powers that be are doing. We have a debt crisis. Say, we've got a debt crisis. I know what to do. We'll create more